Hello, listeners. My name is Raj Singhal, and welcome to another episode of Breaking Investment Stereotypes. Here we deconstruct world class investors or wealth managers and deep dive into their investing journey professionally, personally, or both. This episode is brought to you by Multiply.co, where we believe that investing is an ignored life skill. Our mission is to create a platform where people can come learn, share, and collaborate through the right tools. We have now gone live, and thousands of users are already part of a very vibrant community. So do check out our app, which is there on both Apple Store and Play Store, or simply just sign up on web. I want to give little guidance on how to use the shows. None of the following should be taken as an investment advice. Please see multiply.co/disclosures for more information.
My guest for today is Radhika Gupta. Radhika is currently MD and CEO of Edelweiss Asset Management Limited. She is a graduate from Management and Technology program at UPenn, USA, with joint degree in economics from the Wharton School and computer science engineering from the Moore School. She has recently been elected as Vice-Chairperson at AMFI. Radhika started her career with McKinsey Company and then progressed to become a hedge fund manager at AQR Capital, one of the world's largest systematic asset managers. She then moved to India to start her own venture fund, Forefront Capital Management, an alternative asset management firm, which was acquired by Edelweiss in 2014. A true global personality, having traveled across 4 continents, she is the founding president of UPenn Alumni Club, a member of the Global Leadership Council of the Management and Technology program, and a board member of AMFI. A keen microblogger on Twitter and an avid bridge player. Her unique life story narrated in the video, The Girl with a Broken Neck, which I strongly recommend you to watch, has garnered over 1.8 lakh views. So without further ado, please welcome Radhika. Hi, Radhika. Good to see you here.
Great to be here, and thank you for having me, I guess, virtually.
Thank you. So I'll start with your life journey, and you have had a very interesting life experiences. You were born in Pakistan, grew up all over the world, including Nigeria. You loved Italy. Tell us more about your life journey.
So firstly, I don't take any credit for my life journey, right? The credit for these things goes to my parents. I was having a conversation, I think, with Monish Pabrai, it was last week, and he was telling me, you're very fortunate to have the background and experiences that you did, because of your parents. And I said, the because of your parents is correct, because when we were growing up and we were moving all these countries, I don't think I gave my parents particular credit for it. I mean, this wasn't a time when social media was very prevalent. So as young kids, our perspective was, you're taking away our school, you're taking away our friends. And as I said, because social media was not there, it was very hard to keep in touch. There was no email. I mean, email showed up by the time I was in 11th grade, which makes me probably sound very old to a generation of people. So as young kids, I think we thought it was a very tumultuous childhood. And yet, what was amazing, Raj, is, I mean, and the way I think a lot of people don't know. So when people hear that I'm a foreign service officer's daughter and I've done all these talks, they assume it's a very privileged existence, which, is absolutely not true. If my parents worked for the government, you don't earn a lot of money. You get a lot in terms of sort of experiences, but you move from very extreme countries. It's like living market cycles almost, because there's a system of rating countries from A to C. You move from an A country, which is really developed and superb, where you get everything, to a C country. So the transitions are very drastic, So you'll be sitting in Nigeria knowing that after 3 years, I'm going to go to someplace awesome like Italy. But then you'll be sitting in Italy knowing that my next stop is also going to be someplace like Zambia. And that's literally what it is. So it is very extreme in terms of environments. I guess it prepares you, as I said, for market cycles really well. But I think the benefit of that is my parents always had this belief that you had to make the best of every country that you were living in. So they were like, listen, we have 3 years here and we can either sit and whine about these 3 years, but the reality is we have 3 years, or we can make these 3 years awesome. So in Nigeria, it was about picking up golf and, spending more time as a family, because there's no place to go out, right? There was no place to holiday. There's no place. But when we moved to Italy, it was about, in whatever limited money we had, trying to see as much as we could before I went off to college. So they really tried to make this whole sense of cycles a lot more normal, and yet try to make the best of every country and every cycle that we had.
No, that's really awesome, and I think you mentioned that a lot of your personal habits have been shaped from your stay in Italy. So tell us more about that.
So there's some superficial ones, and I think over time there are probably some deeper ones, and they've probably been shaped by Italy because I was in high school then. I think 15 to 18 is a pretty impressionable age for most people. I mean, superficially, my absolute obsession for coffee. I grind coffee beans every morning. By the
Wow.
way, most people know this. And I will never have a bad cup of coffee. My love for food, my love for Italian cooking, all that comes from Italy. But I think also, there's a great thing to learn from the Europeans and the Italians, which is a respect for your core values, which is a respect for your inherent culture. At that time when I lived in Italy, despite the prevalence of US fast food chains everywhere, Italy actually never had Pizza Hut, Starbucks. They were very proud of the fact that they had cappuccino, which was very core to Italy, that they made Italian food a certain way. And, they didn't let the Western narrative corrupt that. Their respect for their culture and their tourism. I've always said I want to be tourism minister of India at some point in my life. That's very, very shaped by Italy because, Italy, you go there and there's a tiny stone that's 2000 years old, and the Italians will figure out a way to celebrate it and monetize it. India has so much natural history. It's probably the best place for tourism in the world. And yet we don't do anything with it. And it makes my blood boil every time I travel. So I think, a respect for what is your own, a respect for your roots, and also a love to change tourism. I think a lot of those habits come from living in Italy.
No, I completely agree. So I studied in Banaras in BHU, and Banaras is supposed to be the oldest city in the world, right? It's like 6,000-year old. So they're trying to do things now. I mean, the government is trying to do things and make it better, right? The temple can be visible from a distance, but it breaks your heart to see what we have made out of that city, right? I mean, it's such a great place. And you go to play somewhere, they will show you, this is 100-year-old. I mean, come on. I mean, we have things which is like 2000.
In Banaras,
yeah,
it's incredible.
Yeah. So
I mean, there's nothing that Banaras doesn't have. I had written actually a piece of poetry on the tourism case for Banaras once.
Wow. Okay.
From your ghat to your tomato ki chaat to your sari to everything that there is in Banaras, and yet we haven't tapped the potential. My father has a religious pilgrimage in Agra, and when I go to see parts of Agra, I'm like, guys, we can do so much more with this. I did a trip to Meghalaya after the first lockdown. See the Northeast, and like, God, I can do much with this. I mean, it matches Scotland in every avatar. So
yeah. That's part of my to-do list when we move back. So I've not done Northeast except probably, I mean, Calcutta, we can't count as Northeast. Actually, I want to come to you mentioned Nigeria, right? So, and Nigeria can be a very tricky place to live, even as an expat. But you always have this support of community. I think you've spoken about that part, and people really undervalue the value of community. And then we are trying to solve this whole problem on investing through the community itself. So it's very near and dear to us. Throw us some lights on what did you learn from this whole community, what you saw in Nigeria.
I think communities, and I'll come to Nigeria, and I'll come to sort of, as I've become older, I've become a big believer in communities. Now, when we grew up in Nigeria, as you said, Nigeria is a very tricky place. For like when my husband Nalin and I talk, he doesn't believe the stories of Nigeria. I tell him because it seems out of some wayward land. Because there are so many challenges. There are challenges of law and order. There are challenges of corruption. There are challenges of getting basic things like milk. I mean, at that point, we used to drink milk from milk powder, right? So there are basic challenges of existence, or they were at that point in the mid-90s. And yet it is a very, very happy place. If you talk to the average Nigerian who worked at your home or that you met, there is a sense of optimism that comes from the community. And there is a belief that if something, so our cooks there would often say, they'd run out of money by 10th, 15th of the month. And then we'd ask them, Guzara kaise chalega? How will things happen? And they'd be like, the community will support me. And I think that sense of community, knowing that there is someone there for you, is very, very powerful. And as I've grown older, as I said, I've realized the importance of community. I've realized the importance of community as a woman in finance, which we can talk about later, having that support system. I've realized the importance of community. I joined a CEO network called YPO 2 years ago, and it was just to have a wider sense of community. One of the reasons to be on social also is to have a sense of community. So I think communities are very powerful, and we are in some sense losing our sense of community as we go digital. So we are becoming more isolated, but you do need people to reach out to and talk to. Sometimes I'll tell you, as a working woman, when I go through strange incidences in my life or something personal and professional that mixes and I'm confused, I'll read the story of someone else in the community, or I'll reach out to someone and I'll be like, oh, you went through this. And it gives you a certain sense of reassurance, a certain sense of, advice. So I've had a couple of conversations with Zia Modi or Arundhati Bhattacharya, and us working women or senior corporate women are a small crew, but just knowing that people are out there, I think, is a very powerful feeling.
No, I completely, and we strongly believe in that. So you did all of your schooling and graduation abroad, and you studied at prestigious, right, Wharton School, and I'm sure you made your parents very proud with that. Are you still involved in this whole Wharton ecosystem? And more importantly, actually, how long India will take to create such an institution? I mean, while we have good IITs and IIMs, but US colleges are at a very different level.
I agree, and I think and it's getting better in India, by the way. People often ask me what a great Ivy League education gives you. And while I would say the education is definitely world class, I think it gives you a confidence and a sense of community that is lifelong. I am actually very involved in the Penn and Wharton ecosystem. I'm married to someone also who's an alumni. We were classmates. And incidentally, in my graduating class, many of us came back to India and most of us married each other. So it's a very good community. We are, as Penn/Wharton alumni, the largest foreign university alumni club in India. So I was the founder president of that. And even today, it's incredible, at least pre-COVID, all of us used to meet at a very, very regular frequency. And it's great. You can reach out to an alumni from class of 1985. And yet there's a shared connection and shared history, even though I am class of 2005 and I clearly didn't overlap with anyone from 1989 or 1985. But there is a sense of camaraderie. I mean, 2 days ago, someone reached out to me for angel funding and he said, we share Wharton in common. And the we share Wharton in common becomes very, very powerful. I think as far as Indian institutions, I think we're making progress. I think our problem of numbers is, of course, a more challenging one. But I think we're making progress. I think alumni networks, by the way, are becoming stronger in Indian institutions. My father-in-law is an alumni of IIM Ahmedabad. My father's own civil services network, by the way, is a very, very powerful alumni community. But it is a while to go. It is transforming an Indian education system is a while to go.
I agree. I mean, the networks are getting stronger. But one thing, and this is, I can see this is happening now. The way the colleges in US get their alumni together, and there's some way of inspiration for them to actually give back to those colleges. And we are seeing that now in our country as well. And a lot of us are participating in that. But I think still have a long way to go. But I think that is a very powerful way of doing and getting the colleges up to the level as
and there's a regular outreach. So Penn will have its deans from various colleges come down to India at some frequency. There's a whole chapter for alumni relations. They'll find different ways to engage alumni. Alumni will go back to campus and speak. So it is a two-way effort. Yeah. It can't be alumni saying, I am going to give. The college also has to learn to engage. So, for most of us who graduated from Penn, even sitting in India, we never feel like we've disconnected. As I said, till pre-COVID, every year, all the deans of Penn, and I mean, Dean of Wharton, Dean of Engineering, these are senior folks, would come down to India, would meet alumni, would update you every year. What are the new buildings coming to campus? What are the new initiatives? Every time I've made a trip to the US, it's almost mandatory that you have to go back to campus. So I think that relationship building is a two-way process, and I think US colleges do it extremely well.
Yeah, they're very good. That. The other thing I found very amazing about you is that you traded mortgages, and I think this was the period 2006 to 8. I used to work in Merrill, and while we've all heard about all these stories, but being in India, we were a little away from all what was happening until I read and saw Too Big to Fail, which is Merrill was a big part of the whole book as well. What was the experience like? This was the days of ninja loans, CDOs, CLOs, and whatnot, and they are the epicenter of the whole financial crisis, right? So, by the way, where was this the mortgage trading? Which entity you were, or which organization was that?
So many people don't know, at least in the Indian context, that I traded mortgages. Most people assume that I started my career as some public speaking salesperson or business head in some organization, not realizing that I actually, after my consulting stint, worked at a firm called AQR Capital.
Yep, I know.
Prominent hedge fund. Yeah. Cliff Asness is from the same program at Penn. Fantastic. If you don't follow,
they're very big now. I mean, they're one of the largest quant funds now, probably north of 50 billion or maybe 100 billions now. So they used to be a big client for us.
I think that
they used to be a big
I think that number might be closer to 200 if I'm not wrong.
Okay.
But
wow.
When I joined them, they were about a 25 billion dollar fund. As you said, rooted in quant, very, very academic in nature. So, Cliff is University of Chicago, PhD. And one of the great things is AQR wasn't like a regular hedge fund. It was like academia and hedge fund. I mean, we used to have Nassim Taleb come and talk to us routinely, and we didn't think it was a big deal. I mean, that was just the academic environment. So I started at AQR, and I started on the fixed income side, and what I got was mortgages. I don't know why I was given mortgages. So I started trading vanilla mortgages, Fannie Mae, Ginnie Mae, that kind of stuff. Then I started trading some of the collateralized mortgages. And yes, this was the time of ninja loans for those who don't know, no income, no job, no assets. And mortgages are one of the most complicated fixed income products to actually trade. So I guess the good thing is it was very good for my fixed income learning at that point in time, because I mean, if you can understand how mortgages are priced, I think most stuff comes easy. It also then became a very complicated thing because we also know what happened to that industry in 2008. But yeah, I started my career trading mortgages, and I learned quite a bit about bond pricing from trading mortgages. I also traded inflation-linked securities, currencies, swaps. So all your most exotic fixed income instruments in developed and emerging markets.
That's amazing. So were you there when the whole financial crisis was unfolding, or you had moved to India by then?
No, I saw the financial crisis very live. In fact, for people who don't know, before the financial crisis in August 2007, there was also a very prominent quant crisis on Wall Street. So I remember going to work. This is, I think, August or September 2007. There were basically a couple of quant firms, Goldman, AQR, a couple of them, correlated positions that people had taken. And because of redemption, some of those positions unwound and there were very large losses. So I remember going to office at 9 in the morning with a couple of colleagues, and at AQR, you could see live P&L on the internet as an employee. And I think we had a $4 billion fund that had lost 100 million that morning. I think by the time we reached office, that number had become 300 million live. And by the end of the day, that fund was down $1 billion.
Wow.
And we saw the quant crisis, then we saw Bear Stearns happening in March 2008, and then we saw Lehman. And I think that was probably the most transformative period in my career. As I said, my husband Nalin worked at Goldman at that point in time. So for both of us, I think very transformative. It really shaped our perception of risk. I remember every few days the head of risk would come and say, "Okay, stop trading with this counterparty," and we're like, "But this is a big bank. How can you tell us to stop with this XYZ?" And I think also, Raj, personally, it showed you that financial services can be extremely cyclical, and cycles can turn very, very quickly, and all assumptions sort of go out of the window. So assumptions on liquidity, assumptions on risk, assumptions on counterparties, those change. Also, I think a very lasting memory of '08 is to see many of your colleagues lose jobs, the amount of layoffs that happened, the human cost of 2008 is something that I felt and saw very, very closely.
Yeah, I have this funny story. So how far we were moved, I mean, from this whole thing in India. So we were at Merrill, and, we had applied for banking license because we were not a bank. And the weekend before, and the weekend which Lehman went down and Merrill was bought over by Bank of America. After seeing that news, I actually, told my told a colleague and a friend, a CFO, used to be CFO for us, and now he's the CFO for Asia Pacific. I actually wrote to him after seeing the message that we've got the banking license. Because the Bank of America bought over Merrill, and I said we got the banking license. So
it was interesting. Lehman blew up on the night of my 25th birthday. I have a thing with. So we had a birthday party for me at home, and then we found out that Lehman blew up, and then obviously that birthday party ended very quickly. I had a friend who worked at AIG. You may remember what happened to AIG at that point. There was this whole Wall Street versus Main Street movement. She stopped going to work wearing any AIG memorable, clothing or sweatshirts, and she stopped wearing her AIG ID because people were so angry at people from Wall Street. When Lehman happened, you had friends who worked at Lehman who were walking out, taking their boxes, and there were signs on the Lehman thing saying stock is worth $1, etc., etc. So there is a tremendous human cost to all of this. And I think the big learning is never it taught me a lot about personal finance, which is separate, but the big learning is, I think, never let the excess go to your head.
Yeah. That is true. So what made you move to India then? I mean, this was very early days for India, by the way. So what made you move to India?
It was very early days for India. It was very early days for me also. I was 24 when India. And it wasn't a popular decision then because, see, when you are a middle class kid who has, fought their way to study abroad and then come back and, made it and survived the layoffs, and your parents are like, "Ye, wapas kyun aane ka hai? Why do you want to come back?" And then they tell you, you should come back, but come back as India MD of Goldman. So you have a nice apartment in Bombay and, you have a big salary. But I really think, you don't predict these things. There was desire to come back and do something more. To start something of your own. And I don't think it's rational. And by the way, I don't know if I would have the courage to make that decision today. I think, youth lends a certain sense of abandon, and you don't overthink these things. So I want to say it looks like a very intelligent, calculated decision. And the other thing you think is, look, what's the worst that can happen? I said I'd go back for an MBA, right? I have a good undergrad education. I have some reasonable names on my pedigree. The other thing that helped is we had saved some money. So we could fund the business ourselves. And I think, to that point, a certain amount of financial independence also gives you the courage to make these kind of decisions. It was early days for India, as you said, but I think India was gathering momentum. 4, 5, 6 had happened, the whole BRICS thing was being talked about. So even as people living outside India, you could feel some buzz about India. And the funny thing is, Raj, the first day I moved back, we went to meet a broker, I think 2 days after. And my father-in-law, who's been in financial services, said, "Go meet a broker and go get some, advice," type thing. That was the day UPA 2 had come to power and the market was up 17%. And we were walking around at this broker's office in Pitholi, and nobody cared about us three kids. And we were wondering why, and they were distributing dairy milks. And then we realized this whole UPA 2 thing had happened. So incidentally, it also became a decent time to come back to India.
Yeah. So, and you started your own company here, Forefront Capital. What are the learnings on that? I mean, what are you guys be doing in that?
So I think the biggest learning is, which continues to be, that it's really hard to build an asset management business ground up. You are taking money from people and they have to trust you. And beyond a point, being a Wharton graduate, having a lot of pedigree, all of that doesn't matter. Raising money is extremely hard, and you have to earn the trust of people. And building a business, being an investment professional is one thing, running a business is a slightly different thing. So there are a lot more components that go into building a business, right from the regulatory and compliance part to the admin part, to the brand building part. Because this was all very new, right? When I always tell this, and I tell investment professionals in my office this, I said, sometimes we can live in a bubble, right? As investment people, right? We get money, you have to manage it well, and you just assume that nobody else does anything valuable. When I started running a business, I realized there's a lot of 80% of stuff. It's just like a film is not made of actors. There's a whole crew that does stuff around it. So I think that was one. But I think the second was that really raising money is hard, and you really have to think from a customer lens. So, I had never been involved in financial product design before. And I think even at Forefront, the first 3-4 products we designed were terrible. We just took what we had in the US and tried to sort of cut, copy, and paste it here without thinking that, will people understand this? Is it solving any consumer's problem? How are we going to communicate this to a consumer? And I think it was by 2013, 4 years after that we had started the business, after years of meeting investors, years of meeting consumers, that we learned a little bit about how to design products. But that learning has been very useful today, because I think a lot of what we do at Edelweiss, and I think the early success that we've seen within Edelweiss MF also, has been around product design. And a lot of that thinking has been shaped from that era of asking questions, and really, because asset management companies can market anything, right? And we all love what we all love what we manufacture, but is it actually solving someone's problem? I think that that learning comes from there. And there's another funny one that because it was so hard to raise money then, and I was the one raising money. I mean, each 25 lakh check felt like a victory. And so redemptions felt very painful. Until today, for me, I look at our MIS every day. Redemptions feel very painful. They actually feel very painful for me. I don't know if many CEOs of asset management companies, because I just remember that era of what it took to raise money. So I find redemptions very painful. I'm very obsessed with it.
No, it can happen. Before I move forward, you mentioned that you'd saved some money when you moved, and then that gave you confidence of moving to India. But this was all around the financial crisis. So what made you not lose money in the financial crisis? Because this is going to be a good thing.
I lost a lot of money in the financial crisis.
Okay.
So I saved the money. I was smart. The smart part was I saved the money. Outside splurging on a few things, I saved quite a bit of money. 2005 and 6 and 7 were very good years for bonuses. In 6, we didn't invest. In 7, started to do a little bit of investing, and then dumped all the money into equities in 2007 mid. So you're smiling because you know what happened to it afterwards. I did that. And as I said, my husband who worked for Goldman did that. And, when 2009 happened, we realized that we had the drawdowns of 8 and we had to redeem at the bottom in 9. And so that was exceptionally painful. And I think the other big learning of that time was that, two people need to be diversified. So if you look at our current portfolios, they're a lot more conservative, me and Nalin, because we realize our profession is very, very aggressive and very risk-taking. We're a married couple in financial services with a high degree of ESOPs in an NBFC that is levered. We are like 5x beta of the market. So our personal investments are like balanced advantage funds. And this surprised a lot of people. This was the learning from it. So we made money, but we lost a lot of money in poor asset allocation.
Yeah, I've read this line, and I tell everyone that you don't become millionaire by making millions. You only become millionaire by saving millions. So you have to save.
Yeah.
So, so be very mindful of how do you save. Um, Edelweiss. So becoming one of the youngest CEO, and more importantly, actually being, I want to bring in the element of being in women as well, because the odds are always against women. So tell us more. How did that happen?
So it happened a little by chance, as I think most things do. The acquisition by Edelweiss happened in 2014. And I think the good thing which Edelweiss doesn't get enough credit for is it's a growth environment. And while people may see my story as unconventional, Edelweiss has actually given a lot of chances to young leaders. So most of the leaders in Edelweiss Group are actually first-time leaders in the businesses, and they're very, very young. And that happens to be Rashesh's DNA. And as I said, I don't think we get enough credit for that. Because the thinking is that a young person will bring something new and unconventional. So when Edelweiss was sort of thinking about the AMC business, this was in 2016, we had acquired JP Morgan then. I got involved in the acquisition, and it's pretty weird to hand over an acquisition of two mutual funds to someone who does not come from mutual funds. And I had never managed people, Raj, actually till then, because Forefront Capital, the team was 6 people. I mean, I had never managed anybody. But to handle a merger like that, and then I kind of raised up my hand and said, listen, if you're looking to expand the mutual fund business and you need a CEO, I'm kind of here. So that's essentially how it happened, thankfully. And I said, yeah, I know, look, I'm an unconventional candidate, age, woman, etc. But very confidently, I told my boss that, there are lots of people who bring lots of stuff to this business, but nobody will love it as much as me, and nobody will have the kind of passion. So this is a little Tushan of a young girl speaking, but that's essentially how it happened. That's how I got there. And when I joined in 17, I think 17 was a golden year for the mutual fund industry because of demonetization. I was very lost. So I've taken my time to find my way, because it's also an industry where people come with so much experience. I mean, people have been here for 20, 25 years. When they sit in AMFI or in conferences, they talk with so much history about this industry. And that was very, very new for me. So I think the first year or two, I was absolutely lost. Now I feel very settled. I'm actually completing 5 years. I'll complete 5 years on 1st Feb in this industry. And I feel very, very settled. But I started by feeling very, very lost.
Yeah. One important thing you brought up is a lot of these things, and I love mentoring people, and I keep telling everyone that, you have to ask for yourself. It will not happen on your own, right? And I think you also tweeted about that whole Modi and Trump thing where, that selfie, I read that. You have to ask for yourself, otherwise nobody's going to, they don't know that you are interested. You need to tell them.
I have become notorious for this. I think because of that tweet, and there was a podcast where I talked about asking and told my own story. Not nearly, I mean, a lot of young men and women write to me, nearly every day. And the most common thing they say is that the podcast or the tweet told them to ask, and asking was powerful. I probably have 200 messages in my inbox of real stories of people who raised their hand up and at work or in life and asked for something. And I think it's incredible. It's one of the things that keeps motivating me to write, but it is incredible. And life has no knights in shining armor. You are your knight, you are your armor, and you have to find a way to make yourself shine, right? So go ahead and do it. Why should you assume that, someone's going to figure out, Acha, Radhika is such a nice, competent person. Let me give her a promotion. Let me think about her. Whose problem is it?
Yeah.
Us. And there's no shame in asking, and there's no shame in being told no also.
Yeah. My daughter's just started working in US, and I actually wrote to her what all she can do, and I don't know whether she follows any of them or not, because the kids don't listen to the parents. But I actually wrote to her what to look out for. Coming to the social media, then, we all know the social media is a double-edged sword, right? On one hand, it helps you voice your opinion, reach out to millions of people, but it can also get ugly. Right? I mean, people can troll you. So there are positive, negatives, and I think you probably found your first PMS client through media only, and you're very quite active. So what's your overall view on social media?
I think social media I'm a banya. It's a free tool out there to build your company's brand and to have a voice and have people listen. And if you don't use it, you're just giving up an
Yeah.
opportunity, a
True.
free opportunity. And the reason I got into media first, when I started Forefront, social media wasn't that prominent, but I found my first client off an article I wrote on money control. And he read the first non-family client because one very prominent Indian investor, when I went to get advice from him in 2009 and 10, he said, "Jo dikhta hai na, wo bikhta hai." People know who you are, especially as a young company. And basically, he was the one who motivated me. In my early days, I used to show up on 4 TV channels a day. And I realized, by the way, that writing on money control and showing up on TV channels actually helped the company. Social media I got into after I became CEO. I had a Twitter account before that, but I don't think it had any engagement or followers. One of the learnings that I had when I became CEO is that when you are and I hate this word, but I'm still going to use it. When you're the CEO of a small AMC in India, nobody cares about you. You don't get much, at least then, you don't get invited to conferences. You don't get much media coverage. And especially if you're not from the industry, why should anyone care to give you any space, right? And yet, it is a retail business. You need to be out there if you need to be visible. Now, if you have interesting things to say, social media is a way to say it. And gradually people get to know you, a network of your industry gets to know you, advisors get to know you, journalists get to know you, and so on and so forth. Obviously, now in the COVID period, it's been incredible because it's a fantastic platform for me to interact with advisors, distributors, investors. You get very real investor feedback. So, I don't need to know if there's a problem at my call center or website. I know that 5 Twitter queries will come that day and I'll tell my team, kuch to problem hai. So you get very real-time feedback on how you're doing, your competition is doing. And honestly, personally, I like to write. I'm a closet writer. So social media has been a way to sort of, do things, and experiment with my writing and thinking. And as far as trolls, I get trolled a ton. I get trolled whenever I say anything about why you should not have panels and women should be represented on financial services panels. I get trolled for nearly everything I say. But those trolls are 5-7%. 90-95% of it is so much love. I mean, my team jokes that if you want to be happy, just see Radhika's social media profile, the kind of letters, messages from people, their kids. Someone sent me her mother's sari looking at some of my social media feed. I mean, so the amount of love is so enormous that 5% of trolls can't take away from it in any way. Anybody who's grown up knows that you get trolled offline too. You have annoying relatives who say things to you. So online ho gaya to kya hai? It's okay, it's all good.
Interesting. Bond ETF, so being a fixed income guy, that's something very near and dear to me. And you guys had one of the most successful launches. So tell us, what are you seeing in that? I mean, this is interesting. Something.
So I can talk about bond ETF for ever. I acquired the nickname Bond Girl from some of my colleagues, which is not a name that I want, but at least it's homage to my mortgage background. I have always believed that fixed income is a big opportunity. I don't think the asset management business can be built solely on equities because India is a country that saves. And you have to capture the fixed income part of the asset allocation. I've always believed that bonds are an essential part of the asset allocation. Now, when you think about debt mutual funds in India, debt is meant to be a simple asset class. I park money either in a savings account or I park money in an FD. Now, when I park money in an FD, I don't really care what the RBI is doing to rates, what's happening to crude, what's happening to inflation. It's fixed income. It's a fixed experience. I park money for a certain time period, expecting a certain rate, and I expect a reasonably consistent experience. And I think active bond investing has become very complicated in the country. That's our belief. My father was telling me this. He was trying to park money in one of these debt mutual funds. And he said, I don't even understand the difference between low duration, short term, and ultra short term. I know a savings account, right? And the same thing is true, right? Banking PSU fund, corporate bond. I mean, it's just
So there are too many
complicated.
of them. Even I find that very irritating, by the way. So he's still
Yeah, I
proceeding
mean,
from the
it's
market
just,
as well. Yeah.
yeah, I mean, it's just like and Indian investors are FD investors,
Yeah.
right? We used to go to the bank and book an FD at a rate and
Yeah.
then just check it. Um, and I think what our experience with the bond ETF has done is it's made fixed income investing more fixed. The target maturity structure, and we put a year of work into designing what finally became the target maturity bond ETF that was Bharat Bond. And we had lots of argument. I mean, we studied every bond ETF structure that was out there in the world, dynamic bond funds, constant maturity bond funds. And finally, we found something that BlackRock ran called iBond, which is similar to Bharat Bond in nature, not identical. And basically, it solved the problem. It mirrored an FD experience in a debt mutual fund format. It answered two questions very simply: how much will I get, and in how long? And that's about it. It made fixed income investing a lot more predictable. It took the credit risk element out because of the quality of paper, and it took the interest rate risk element out because of the target maturity structure. And I was very sure, by the way, in 2018 or 19, our team was, when we got the structure down, that this would do well. I mean, I was sure it would be a landmark structure because it solves a consumer problem very, very well. The debt passive category in India in the 2 years of launch of Bharat Bond is probably 60,000 crores today. And that's incredible. I mean,
Yeah.
we must be, Edelweiss must be 50, 55,000 crores of that, but it's a 60,000 crore category today. And I just think it's going to get larger and larger. And the good thing is, over the years, customers, corporates, individuals, family offices have started to trust it. We've seen falling rate environments, we've seen rising rate environments, but people seem to be comfortable.
I think you need to go through the cycles, and then only you realize that the product is working. And I mean, I was not aware of these numbers, but it's incredible. I mean, those huge, I would say, and for sure. I mean, I agree with you, right? I mean, bulk of the investments are in FDs, right? So
Yeah.
whoever can create something which is alternate to that, I mean, can be a very meaningful. You can't move all of them. A lot of this is cultural as well, right? A lot of money lies in FD because of cultural thing, because people feel safe, good about banks. But I'm sure a decent part of that can move into the markets and can make difference to people income.
Debt mutual funds have this beautiful tax advantage versus FDs. And I agree with you, Raj. I don't think the movement happens overnight.
Yeah.
It took 20 years for an SIP to become mainstream.
Yeah.
I mean, is it a start that we're making? Of course, we've made a meaningful start.
Yeah. And recently, many new age companies, Zomatos of the world, of course, a lot of them actually have losses, have got listed at very high premium valuation, and some of them are coming off now. Even I think Edelweiss also has got an IPO fund. What are the things you guys look at before adding any company to the portfolio? I'm not talking about individual companies here, generally broader principles.
Yeah, and I think we are the only ones who run an IPO fund for the retail investor. And one of our reasons, and I'll come to new age companies to do that, was actually that I think people think of IPOs all wrong. I mean, they think of IPO as a strange investment opportunity where it's leverage, buy every IPO that comes to the market, look for listing day gains, and it just works out to be a disaster because people never select right. They don't hold on long enough, and anyway, access is a problem. So we said, let's try and solve this consumer problem through an IPO fund. Now, the interesting thing before I come to how we select is we are very selective in the IPO fund. Last year, I think out of 60 companies that IPO'd, we probably did 17, 18. So we say a lot more no's than we do say yes. We have said yes to some new age business models. We have said no. I think on new age business models, there has been so much narrative, and the narrative is very it's very mixed, right? There's a set of people who compare these valuations to old school companies and say, where is the ROE? Where is the profitability? There's a set of people who compare them to global business models and say, this is the US equivalent. There's a set of people who believe that some of these companies have 50% market share within 4 or 5 years, of existing in India. I think our take is we look at every case as is. We look at the basics. I think the basics of companies don't change. We spend a lot of time on management quality. And the good thing about us now is we're 18 equity professionals as Edelweiss Asset Management. We run everything from unlisted and private equity all the way to an IPO fund. So as a team, we manage to see companies through the life cycle and promoters through the life cycle. So we look at management quality. We pay a lot of attention to unit economics of these companies. Sometimes profitability is not there, but if unit economics are meaningful, then we are interested, and we pay a lot of attention to valuation. And I think broadly, we've been reasonably right in our choices of companies, but net, we are very, very discerning. And we try to categorize business models in two parts, more secular business models and more cyclical ones, with a preference for more secular business models.
Oh, IPOs are the India's meme moment, right? I mean, the amount of memes which get created on IPOs investment is incredible.
And some of it, as I said, is a lot of FOMO around IPOs, but I think the fundamental approach that this is a listing, IPO is just an event in the life of a company. I keep joking that Page Industries was down 30% on IPO. It was a disastrous listing. Is Page Industries a bad company? No, it's a brilliant company. There are companies that are fundamentally sound that have terrible listings and go on to do incredible things. There are companies that are the most hyped IPOs of their era without naming them, and they don't exist. Yeah. So an IPO is an event in the life of a company. It's not the be all and end all of the company. And while the fund is called an IPO fund, I think it's a new gen economy fund. Traditional multi-cap fund, because it's benchmarked to indices, will be very heavy on banking and NBFC. Your Edelweiss IPO fund or new gen fund will have exchanges, depositories, asset management companies, RTAs. So I think you have a traditional fund that has IT services. You have a new age fund that has more gaming, e-commerce, etc. So it's also a fund to look at new economy companies because you don't have traditional benchmark restrictions.
Yeah. This whole passive investing, big thing globally with like BlackRock, probably now, I don't know where they are, $6-7 trillion or whatever the assets they have. Where are we in India? I mean, India is still traditionally very active management, and passive is growing, but not growing at that speed at which the global passive investing is growing, right? So what do you think on that?
Okay. So my take on passive investing, and I get this active versus passive question every day. I think my take one can be reasonably unbiased because not many people know this about Edelweiss AMC, but our AUM is 50-50 active passive. It's actually almost 50-50. So we are reasonably sort of unbiased. I don't think US comparisons, and with all respect to the US market, I've spent a lot of time there, are fair because I think as an economy, we are not the US economy of today. In fact, we're much closer to the US economy of the late 80s, early 90s. And equity penetration levels are not where they are in the US. I mean, they're not even world averages. So I think the broader challenge for India is to get more financialization of assets and more people into equities and financial assets. Whether they're passive, active, or smart beta doesn't matter. Now, that said, there is, active investing has had a longer runway. Passive investing will grow. But there's also a myth that goes around with passive investing that all things passive are good and all things active are bad. It's a lot of the social media narrative around passive investing, I think, is misinformed. I think there are great active products out there. There are great categories that lend themselves to active, and there are great passive products out there. And there are also terrible passive products and terrible places to do passive. I'll give you an example. We were talking about this IPO fund. Imagine running a passively managed IPO fund. I mean, that's just a bad strategy. It's an active strategy. But something like a fixed income roll down, that we were running in active funds as an industry, that probably lends itself well to passive investing because that was a roll down strategy. So I think it's important to focus on the strategy as a consumer. And there's a passive platform that's right for some and an active platform that's right for some. And as I said, there are a lot of myths around passive investing, like, oh, let me do an index fund because it doesn't have risk. If you're doing an equity index fund, it has the same
Yeah, of
element
course.
of, let me do something because it's low cost. I think sometimes people just don't look at the complete costs. And so I think passive investing also, there's a framework for making decisions in passive.
Yeah. Interestingly, you mentioned about 80s, right? So I saw one tweet today, and I retweeted that since 1982, S&P index has delivered 1,000 times return. So I think this whole active passive is a lot to do also. People have to match up their behavioral with the kind of investing they want to do, right? Ultimately, it's all about that, right? So as people say, and I think it's mentioned in Howard Marks' latest memo as well, average mutual fund investor do poorly than an average mutual fund, because
Oh, for sure.
because they take out at wrong times, right? And they invest at wrong times. So I think a
So,
lot about, sorry, yeah, go on.
and I'm saying active, passive, the most important things of life are long-term holding
Yeah.
period, investing at the right time, having a decent sense of asset allocation. Now, whether if you look at my mistake of 2008, whether I invested in active funds or passive funds was not the point. It was that I did 100% equity, right? Asset allocation problem was actually a much bigger problem than active or passive.
Yeah, agree. I mean, we wish all of these things somebody teaches you very early we all grew up in a financial market. Despite that, we all have made a lot of mistakes, not some mistakes, a lot of mistakes. So, the last 2 years, we have seen this huge growth in demat accounts, SIPs. SIPs actually is a great thing. Huge, high retail interest into the stock market. How do you see them? I mean, does it normalize, or this is just a trend, or how do you see? How do you guys see this?
With optimism, but cautious optimism, and hopefully responsible optimism. I think some of it is structural. Look, a new generation of young people who's also had a lot of time in COVID coming into the markets, inevitable financialization that we have seen in other markets like China, digital access making these products a lot more accessible because you don't need to fill forms to get them, data about all financial products. I mean, there's an art now that has been made of mutual fund return analysis by so many of these websites. So all data is out there. So a lot of democratization has happened. And as I said, some of this is inevitable and some of this is good. Responsible and cautious optimism, because I don't think the answer or the contest is how many people you get in. It's not how many new investors you get into the market, how many new demat accounts you open. It's how many stay through the cycle. And we've seen in every cycle element of froth. There are people who come in for the wrong reasons. There are people who don't asset allocate right. There are people who chase FOMO. So I think it's also important for people like us, and we take this responsibility very seriously as an asset management company, to be responsible and to make sure that we can guide people towards responsible behavior in the little way we can.
Yeah. True. And in one of your tweets, you mentioned people, nowadays looking for satisfaction by investing in either cryptos or meme stocks. They can generate higher returns. A lot of people are getting influenced by what a lot of people write on Twitter. And people are sharing their screens, showing massive profit. And I think in another tweet, you mentioned that portfolio should be like a dal chawal, right? It should be simple. And I completely agree with that. So what is the best way to have a simple portfolio and also have this satisfaction of investing? People want to have fun
80,
as well.
20.
Sorry?
80-20. No. You can't live life without fun.
Yeah.
Life can't be boring. 80-20 is, I think, maybe I'm a consultant of my early days. So maybe 80-20 is a very good rule. 80% of life is dal chawal. You pick 4 or 5 basic mutual fund categories, equity, multi-cap equity, balanced advantage funds, basic fixed income, and you build your portfolio around them. Dal chawal is healthy and it's nutritious and it's time tested. So are these categories. And just because MFs have 100 categories doesn't mean you need to cater to 100 categories, right? I mean, you don't eat 100 types of cuisine. So I think 80% of the portfolio has to be a select few categories and select few schemes in those categories with serious attention to asset allocation. 20% of the portfolio can be your thematic stuff. It can be some of these ideas, and know that they are thematic, and they can be volatile in nature. So I think 80-20 is a very simple rule. It sounds very, very simple, but I think it works for most people. But that 80 is important, right? Because money is hard earned.
Yep.
You need to have goals, and you need to do sensible things with this. And I tell young people this all the time. So get that 80 locked down, and then you go have fun with your 20.
Yeah, yeah. We all know that, right? Investing is a lot about behavior as well, right? I mean, Psychology of Money is a great book, and it talks a lot about it. What is the one habit, or any habit which can help, and you think which can help somebody to become a better investor?
One habit. I think one, saving regularly is important. And secondly, I think having a sense of goals. Once you have a sense of self, this is true in life as well as in investing. Um, why I'm investing, what my own risk appetite is, then you stay away from things like FOMO. So I think regular saving, and I think just having a very strong sense of goals and self, because I always say investing is not a horse race, right? I'm not fighting with you and five friends to come first in a race where you get 90% and I get 2%. This is not that. I'm not fighting to become Warren Buffett or Cliff Asness. Money is a means to an end. It's a means to live a happier and more fulfilling life, with what you want. And so I think having a sense of goals is very, very important.
Yeah, true. So coming to the topic of the lack of female participation in this whole financial sector, right? We've seen some bit of a success in the banking, where like Bank of America, Kaku's
One-time success.
Yeah, you can say that. But in mutual fund, it's a very small. Like there are only 4 or 5 female in the leadership roles, right? What can be done to increase the participation?
So firstly, anyone who's listening to this podcast and is male or female, if you have answers on what can be done, seriously, write to me. I'm asking in my capacity as vice chairman of AMFI. I really want to know what can be done, because I'm looking for answers, and maybe collective thinking will genuinely help me find those answers. I think we need to widen the funnel. One, we just need to have more people coming in, especially at the investment professional level. One of the things I'm trying to insist in Edelweiss MF is that every investment team, we have at least one woman. And even if that's a mandate, let it be a mandate. I was never a believer in this, but I'm going to go down that route. The second thing is, I think, in a lot of organizations in financial services, we are managing to widen the funnel. So at the entry level, you're seeing 40-50%. But by the mid level, you continue to see a lot of dropouts. So I think tracking promising women in our industry and in our organizations and guiding them through that very important phase where they are likely to drop out, I think is important. And thirdly, perhaps creating a sense of community. We talked about this earlier on the podcast. I think will be very, very helpful. I mean, even within mutual funds, there are very few of us. And there are some younger women also who are climbing the ranks. We all kind of know each other. And I think, I'll periodically see some of these girls from other organizations reach out to me, etc. So even that sense of, there is someone else there, is a very heartening feeling for people to have. So maybe we need a more formal community for ourselves. But I am looking for answers, because I've gotten introduced many times, Raj, as only women CEO, etc. And people assume it's a designation I'm extremely proud of. It's not a designation I'm extremely proud of. It's a designation we should be embarrassed by. 50% of our consumers are meant to be women, and we have one woman CEO. I mean, it's a bad story. We should be embarrassed by it, not proud of it. And I hope that, the next generation changes that.
Yeah. One thing which helped us is, the intervention you talked about, right? Making sure when you're hiring at least the entry level, I mean, interns and associates, analysts, making sure that that ratio is proper. At least you create the funnel, as you mentioned, and then hope that, a lot of them will stay on. I mean, people, of course, will drop off. I mean, frankly, in our own organization where, we are whole and soul and nobody else is there to tell us what to do, we've been struggling to find even the candidates to come and talk to us, right? I mean, and then you have left with no choice. So it's a problem. I don't know what is the solution. I mean, probably a lot of us can help in mentoring and, I don't know, guiding and whatever we can do. And I'm happy to play my role as well in that. But
I have one more suggestion for everyone who's a man on the call.
Yeah.
Any financial services panels you do, events you do, podcasts you do, make sure there's female participation. I've become a little notorious on Twitter for fighting the manel, which is a panel with all men. In fact, I call conference organizers when I see a manel now, and I tell them that if you don't add a woman on this, then I'm going to start ranting about it. And some people get very upset. And people think this is random. I think role modeling is very powerful. Rajavan, Nykaa listed, regardless of what you think of the company or the listing or the valuations, okay? There was a very powerful role modeling effect that a woman in India became a self-made billionaire. I mean, I'm on enough women's groups to know what happened. When any one of us goes out and tells our story, when Indra Nui became what she did, role models are extremely powerful in this country. And negative role modeling, when you see a conference with 30 men on a panel talking about investing and not a single woman, what is the message you send to prospective women candidates in the financial services industry or prospective women who are looking to take an interest in managing their money? This is not for me. That's the message you send. This is a man's world. So help us change that.
Yeah, no, I agree. Completely agree with you. So, by the way, we've tried to get, like, Lakshmi has been on the podcast, Aditi has been on the podcast, and of course you are there now. So we are trying our best to do that. Let's come to the workplace. And in India, I think the offices have not opened for the last 2 years, I guess. Since the time COVID has hit, and a lot of people are working from home. A lot of people actually moved back to their hometown, right? Because it's all work from home. The other thing which has been happening, and actually it's across the generation, I would say, is this whole mental health issues, right? I mean, starting from kids to even adults, and what adults, I mean, even people of our parents' age also going through this whole mental issues. How do you see all of them, both from the, being a, leader in the office, and also generally, what do you see on this whole thing?
So this is a topic very close to my heart. And firstly, I would say COVID has been extraordinarily tough on people. Last year, I think this was after lockdown too, when, April and May were really bad. I called, we have this series called Tryst with Brilliance at Edelweiss, where we call CEOs, and we'll get finance CEOs and media CEOs and lawyers, etc., to talk to our team and generally get people from other industries. And we get very good turnout in this series. Then we decided after wave 2, we are going to get a psychologist and a mental health professional. And I assumed 20 people would show up out of a 200% team. We had the maximum turnout.
Wow.
And again, 2 days ago, we did some session on mental health and Omicron. We had full turnout.
Yeah.
So that people are grappling, struggling, want to cope. And these sessions are so healing because, when a head of fixed income talks about how he's grappling or struggling with his children, it makes him so much more relatable to everybody in the team, to a guy sitting in the airport branch, because they're connecting on a human level, right? So, and even wave 3, the current Omicron wave that we're sitting through, even though it's mild, when I'm talking to employees, it is tough on people. Even the logistics of managing quarantine are tough on people.
Yeah.
So I think, offices have to realize, and workplaces have to realize, that mental health is important. If a guy's mental health or a girl's mental health is not there, they're not going to bring 100% to work. And one of the things I don't like about financial services is we've always been perceived as a numbers, cutthroat-driven industry. I think a lot more, there's a call for a lot more empathy that can be, brought to workplaces. We were supposed to do an NFO in February, and many people would know that Jan, Feb, March is a very important period in terms of quarter end, etc., etc. And we took a very conscious call to defer it because we don't want to do product launches in a time when people's families are grappling with COVID and their kids have fever. We just don't want to do that. And I just think mental health needs to be brought to the forefront. I get, by the way, many letters because of some of the talks I've done on people coping with mental health issues. And that's just gone up in COVID. So I think we need to find and give space to have these conversations. And empathy at the workplace can coexist with aggression in business. I'm very aggressive about business, but I think it can coexist with empathy at the workplace. You can be soft on people, you can be kind to people, open to people, because when people are happier, you will see them give 150% to work. There was an article today, by the way, on an anti-work activist movement and how people just don't want to go to work after COVID.
US is a big
there's more to
resignation.
life than getting a paycheck.
Yeah, in US, there's a whole big resignation going on, right? I mean, millions of people are actually not going back to the work. And I mean, I don't know I don't think this is there in India yet, but globally, people are seeing that. I mean, of course, a lot of it also is driven by the fact that people have made money in whatever way they have made money, and they think that they have enough, but it's a big thing.
But you will see it in India, Raj, because, our parents' generation was one where scarcity drove a lot of people to work, just a basic need to earn a living. As generations get more prosperous, work will be more about meaning because money is not the only driver of work. I think, I'm a generation older. I mean, I see younger kids at the office. In my time, a bigger brand, work, paycheck, it really mattered. And, especially from the backgrounds. A lot of the kids today, if they find a manager talking to them rudely, if they don't feel respected, if they don't find purpose and meaning, they don't hesitate to quit. And often it's without another job. It's something I couldn't have imagined doing in my time.
Good part of the generation, young generation, is that they, because of because the way they've interacted on social media, they don't have hierarchy in their mind, right? They talk to you at the same level. So which is a great thing. I mean, I think that is one positive out of social media, I would say, that they can talk to you at the same level. So they don't hesitate. Yeah. So we're coming back to the end of our conversation. So this is one thing we ask each and every guest. What advice will you give to your 20-year-old self?
Work hard, trust your sort of unique self, and know that life will work out.
That's pretty awesome. So thanks a lot, Radhika, for being here. And I think it was a lovely conversation. I really enjoyed it. Thank you so much.
Thank you so much.